Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
So good to have you with us every Saturday morning. Thank you for finding your way in. It's Real Radio, 92.1, 101.7. Great to have you tuning in. Of course, if you're on your free download, your iHeartRadio app, that makes us worldwide. We appreciate you finding your way into Florida Talk Real Estate on a Saturday. You also can stream us live. That's right. You can be a little interactive with some video. Two ways. Facebook, Florida Talk Real Estate on Facebook. We go streaming live. Good morning to everybody right out the gates with us. Of course, on YouTube as well. That's Florida Talk Real Estate LLC on YouTube. Also streaming live as of right now on this Saturday morning as we get 2 hours of infotainment going for you. Of course, remember, Florida Talk Real Estate is .com. That's your one-stop real estate shop. Access to the entire team always during this 2-hour chunk on a Saturday. You got questions, comments, concerns in the world of real estate, go ahead and pick up your phone. Dial 877-927-6969. Jimothy will line you up. You make the call, we'll take the call. We is me, Johnny C., your boy, your air traffic control, and, of course, your starting lineup on a Saturday morning. Let's say good morning to Ross Komarinetz with Brightway Insurance, Juno Beach. Ross, how are you, my friend?
Doing well. Good to see everybody. Happy Saturday on this nice long weekend. Hopefully we have some nice weather. Everybody gets to enjoy it.
I'm with you 100%. I hope at least a couple days off for folks. If you get 3 or more, congratulations. Hopefully you got nice plans to fill your time. And as Ross said, hopefully we get some great weather to cooperate along the way. Nice to see you as always, Ross. Jimmy D's with us on this Saturday too. Y'all been telling you for over a decade now. Jim DePola runs a top-producing Keller Williams team. At Keller Williams Innovations, you'll find the Florida Home Pros team. That's where you'll find my boy Jimmy D. Jim DePola, Jimmy D, how you be?
I'm doing good, Johnny. Happy Labor Day, everybody, and happy South Florida. It is a pretty nice day out there today. I drive all the way from the north part of Palm Beach County down to central Palm Beach County in order to get to the studio, which is the Keller Williams office where I'm at. And it's just really nice. You get to see like the weather coming down, and really nice day out today. I think it's going to rain a little bit. Are you guys getting ready for the Artemis Moon launch today? I'm kind of excited about that if it launches.
Wasn't it supposed to be at 8 a.m.?
It's from I think it's 2 to 4 is the launch time today. They keep pushing it back and changing it around. I hope it works. This is a brand new missile, never used before. To launch the rocket or what, I don't want a missile, rocket, whatever you want to call it.
I was reading this morning when they were doing some refueling for that thing. They had some sensors going off, some warnings, but I guess it was all okay. So where we stand right now, we're go as long as everything cooperates later this afternoon.
I'm a really big space kind of nutty thing, and I kind of watch a lot of YouTube videos on it and stuff like that, read a lot of news about it. But I didn't really realize how far along we were with this Artemis project. This one's going to basically shoot this unmanned rocket. I think it has some dummies in there or something that they named. Yeah. But it's going to shoot it. And what's going to happen is it's going to go around the moon and then come back, right? Is that true? Isn't that what's supposed to happen on it? So it's going to go around the moon and then come back as a test run. That's right. The first test run to see if we could do that again.
And then I guess in 2024, it'll be manned doing the same thing, right? And then 2025, I guess we're going to hopefully put boots back on the moon.
Yeah, since 1972. We haven't been back there since 72. So I guess the aliens have told us we're allowed to come back now.
Yeah, right. What's that, Ron?
I can't wait to buy my lot on the moon.
You haven't gotten yours already?
Oh,
I'm behind.
It's so funny when we had we've had so many incarnations of this radio show in my business, right? So at one point we were called Antares International. The reason why we named it Antares at the time was that it's the largest star in the constellation of some thing like Scorpio or something like that, right? So we were joking around that we should get as gifts little pieces of the moon. You can buy pieces of the moon right now in other places, and you could just buy it and have your name, and you quote own the property, right? And I think you pay like $100 or something. You can own a piece of the moon, and then they give you a little plaque saying you own a piece of the moon or whatever, and then they show you on the map where the piece of land is.
So I could put that right on a shelf next to my little printed out certificate saying I own a star.
Yeah, exactly.
Dude, you are a universe real estate mogul.
Yeah,
That's how
exactly.
you
We
build
sell
real
everywhere.
wealth, Ross.
We
That's how you
sell
build
everywhere,
real
right?
wealth.
But yeah, but this Artemis thing, it's going to be pretty exciting to see that program and go through that. That was a pretty exciting 12 years that we had, right? So it was 1960 basically to 1972, and
One of my favorite chunks of years for sure. I was fond of those years.
Yeah. So anyway, God bless everybody. Hope it works out today. We got a lot to talk about today. We're going to talk about insurance because it's just news after news after news. We're also going to talk about interest rates because they've spiked quite a bit over the last 2 weeks. We're also going to talk about the jobs report and the economy. And we're also going to talk about rent prices and how South Florida is starting to deal with the tremendous rent price increases. Is rent control coming in the future or not? Well, it doesn't know, but there was a big thing that just happened in Palm Beach County. So we're going to talk about that. Landlords need to know about what's going on with that, and so do renters, so they know their rights. And we're also going to talk a little bit about buyer's remorse. We're going to start off with that in just a little bit about buyer's remorse. They did surveys of people when, during that big rush that everybody was buying like crazy. And there were so many bidding wars, and everybody was like just doing crazy things to get the house and beat out the competition. Well, now the hangover has come. So there's a survey out there talking about how people felt about their home purchase process now that they're moved in and they can calm down and realize what they've done. So we're going to talk about that. Okay. But first, we're going to do a couple shout outs. I wanted to say shout out to Tom. Here's a funny story. Love Tom. Know Tom very well now. Tom came to me in February of 2020 and said that he wanted to sell his home. He was thinking about retiring, but in a couple of years, he worked in the government. He worked for the government in accounting, and he decided he was going to sell his house while the market was pretty good, and then get a rental, stay there for a couple of years until he retired, and then move on to a different part of the state probably. So okay, but he said there was a catch, and I said, okay. And I'm a big animal lover, people, so don't take this the wrong way, but it was like, I'm not moving until my cat dies. And his cat was pretty old, and he loved the cat, of course. Of course you're going to love your cat, right? And your animal, your pet. And anyway, I just went over to his house and took the listing on Wednesday. Oh. That cat lived and lived and lived and lived, and I kept in touch with him the whole time, checking in with him. We actually started looking for rental properties. He couldn't find anything that he really liked because of the cat situation. So he decided that he was going to stay, and finally the cats passed. Now, I did comps on his property. That cat should have a very special place in this house. Okay. No, because when I met with him in February 2020, we figured his house might be worth $320,000. Okay, maybe. And he might have been pulling money out of his pocket to sell the house. He was almost upside down in 2020.
Oh.
Today, based on real comps that are going on out there, he's in the mid fives. Oh. So I told him that cat. So I told him, you better give hugs and kisses and prayers to that cat every day and have a little memorial in whatever house you buy.
Yeah.
In the future.
You should have stuffed it and then had it like gold plated.
I know, exactly, right? So the $200,000 cat, right? So God bless Tom, and and Doc, and he was loyal to his cat, and his cat paid him back.
Sure did.
Is that crazy or what?
I love that. Story? That's great. I'm glad it worked out in the end. Now we just gotta continue and work hard for him.
Oh yeah, and the house is so nice. The house is really, really nice. We should have, even in this slowing market, this house is going to be super desirable. It's going to be, I expect it to be a very smooth process, and he certainly deserves it. And it also is a testament to us a little bit, at the Florida Home Pros. 2.5 years we called him, checking in. How's everything doing? Cat dead yet? No, I never
Did you
asked him
also
that.
call the vet?
Yeah, exactly. Hey, let me kick you over some money, right? So anyway, I just thought that was really funny. So God bless Tom, and thank you for hiring us, and thank you for trusting us with your business. And we're looking forward to really help you out. It was awesome. Tom's sister was over there helping out. Actually, no, I'm sorry. It was a niece that came over helping out with Tom when I was over there taking the listing. And she lives in northern Palm Beach County. Tom lives in Palm City. It's going to be a 3-bedroom, 2.5-bath pool home in a gated community right off the turnpike exit, like less than 1.5 miles off the turnpike exit. But you don't hear, it's not parallel to the turnpike, so the neighborhood doesn't hear the zoom zoom of the turnpike. So you can commute a lot of different places, very fast commute in this neighborhood. It's a really great neighborhood. And it's going to be in the 5s. So if you're interested, give me a call on that. But his niece was over there helping out and asking some questions about the market. And she goes, what was the lowest interest rate ever? She just asked. She doesn't know I have a radio show or anything, right? I go, well, that was January 7th, 2021, and it was 2.65%. And she kind of looks at me and she goes, where are you at right now? And I'm like, well, 2 weeks ago, we were at 5.13, and then we went to 5.55, and now we're at 5.66 as of yesterday. And she just looks at me like, what? How do you know this stuff? Right? And so anyway, we started talking because she's thinking about selling in 2 years and buying something else, but she doesn't know what part of the state she wants to live in. So we started talking about that. And by the time we're done, she's like, I've talked to a lot of realtors, and you're one of the most informative realtors I've ever talked to. And I was like, well, thank you. And that's like the biggest compliment I could get, is trying to help people and give them the information that they can use.
That's right.
So that's what we're here for. So congratulations to them. I wanted to say another congratulations to Richard and Kathy. They were super big fans of the show. They were moving out of the area to a different part of Florida, and they needed to sell their home. They came to us. Actually, they were not big fans of the show. I take it back. They were best friends with a big fan of the show. Thank you, Greg. And Greg referred us to Richard and Kathy. Then they became fans of the show, listening, hired me. And we just put the house under contract a couple of weeks ago, went through the inspection. Everything went good. And we just got the appraisal back, and we're closing on time. Everything's going great. So nice. Congratulations to them. And we want to say congratulations to Marshall and Chrissy. They're my newest buyers our team is working with. We're really excited about them. They started out looking at townhomes up in the northern part of Palm Beach County, but now they're expanded out to single-family homes and also new construction. And let me tell you, new construction, the way developers handle new construction, they're all a little different. I just went to a development in Jupiter where, first of all, you still have to make an appointment to meet with them. The lots are already pre-decided what house is going to be on the lot and what style of house, and also the finishes for the house, like the inside finishes, are already pre-selected, predetermined. So all you do is you go over there and decide, do I want that lot with what they're going to build there? And if you don't get to change anything around. You just don't buy that lot, right? So it isn't like where you go in and get to pick your finishes and things like that. I thought that was kind of interesting. I'm not sure I'm a big fan of it because I really didn't like the construction materials. I felt like the construction materials, that's why I'm not mentioning the community, but I felt like the construction materials in 10 years, it's going to feel very old, right?
I think like restricting the exterior finishes per lot is good, just because if like 7 people all like, oh, that's the model I want. Now you got 7 of the same houses in a row.
Yeah.
That I get, but like you should be able to, change your cabinets and floors and that stuff.
Yeah, and the finishes weren't really high quality. So I think like over time, the cabinets were going to look pretty shabby, things like that. And, once your cabinets go, your vanities and cabinets go, it's a gut job of that room at that point to a certain extent, right? So, you have to kind of think of that when you're thinking about new construction. You got to think about the long-term future. My always tips on new construction is try to buy the best lot you can, because being in the best part of the neighborhood is the best way to control, to get the biggest bang for growth and appreciation in that neighborhood as the property values go up. You want to be in the best part of the neighborhood, so those are going to go up a little better than like if you're living on the edge of the main collector road coming in or something, right? That isn't going to be as valuable. The other thing is make sure you put your finishes where the money counts. So square footage really matters a lot. So if you can squeeze into a 3-bedroom instead of a 2-bedroom, that might be better than doing upgrades like flooring, for example. You could always put a new floor in eventually over time, but you can't, it's much harder to add addition to your house later on. So you try to buy the biggest house you can within reason. You're not trying to go over budget. And then you decide what kind of finishes you want to put in there, right? Those are all really important things. Developers, let me tell you, developers are acting very strong. I've called a bunch of new construction communities, but it's starting to get pretty weak. Some of these developers are offering much, much higher, triple and quadruple the commissions they were offering a couple of months ago. That's telling me that they're looking for buyers, but some of them are still acting like it's still a very strong seller's market. Now, I have to say that one community that I'm not, mentioning the name, it's 2/3 built out already, meaning that they haven't had anybody move into the community, but 2/3 of it's bought. So that's very strong, right? So they might, their confidence might be well placed.
Yeah.
But I don't know about in the long run. We're going to talk about what the future holds about that. So we'll talk a little bit about that in a little bit.
But what are the timeline of those sales? How recent, you know what I mean? They may have sold out 2/3 of it 6 months ago.
Well, that's a good point. I know that there's 3 lots that they have out right now that that they're in the process of building. They aren't very far along, that they haven't found a buyer for yet. And they're going to be releasing 4 more soon. But the community is very small. I think it's only a collection of 50, 60 homes. So, 7 homes is 15% of the whole neighborhood. You know what I mean? So I don't know. It's very interesting, the market that we're in right now. We'll see how the new construction goes. There's a lot of benefits of new construction. Some of the benefits of new construction. Number one, dirt cheap insurance rates, right, Ross?
Dirt cheap's a relative term.
Comparative to resale.
It might be like moon dirt cheap.
Yeah.
Yeah.
So are prices even going up pretty high for new construction down here too, Ross? Is that happening also?
Yeah, I mean, I it's just not as 2, 3 or 3 years ago. You may have found something less than $1,000, like in Martin County. On a new construction premium.
Yeah.
Now that's not the case.
So if you were to get let's say you were in, just to make it very simple, let's say you were in a 3-bedroom, 2-bath, brand new 2022 home in Port St. Lucie, no HOA, those single lot builders, right? That just build on the lot and that's it. No community. Compared to a year 2000 cinder block home, 3-bedroom, 2-bath with a roof that's 15 years old. Okay. What do you think the price differential will be between the two?
What kind of roof is the 15-year-old roof?
Let's say it's asphalt shingle and the other one's asphalt shingle too. The brand new house has asphalt shingle, and that the new one has impact windows, but the old one only has steel shutters.
I mean, it's tough to say, but I mean, at that point, when the shingle roof is 15 years old, chances are Citizens the only company that's going to take it.
Right.
Or you're at Citizens. So that's at least 2,500 or 3. That's probably, I don't even, when people ask me how much do you think it is nowadays,
you can't, it's so hard.
I'll let you know in a little bit.
Yeah, you got to.
What do you think the range is? I don't know. What do you think?
Yeah,
Yeah.
it's that crazy.
Yeah,
It's
I'll
that
let you
crazy
know
right
one
now.
day, you know?
Yeah, and you know what, guys? I don't, anybody listening that's new, Ross is not like that, right? If Ross knows, he talks numbers to us for 10 years on the show. He's talked numbers with us, but if he doesn't know, he doesn't know. So that's how crazy this market is right now. We're going to get in more of that in a little bit, if you don't mind. But let's talk about this buyer's remorse. Ross, you bought a house over during this time period we're talking about. Between 20, let's see, I want to make sure I got this right. They interviewed 1,000 buyers that bought houses. This is a CNBC article, okay? But it was from Clever Real Estate did the survey. And they did, let me see. I'm just trying to figure out the time frame. Who bought a home in 2021 or 2022. And they did the survey in July. So as long as you bought your home in January 1st, 2021 through July, they interviewed 1,000 people to ask them, do you have any regrets of buying your home? Now, what percentage of the people do you think of home buyers had regrets about their purchases?
It was January through July. So
January 2021 through July 2022.
Oh, okay. So about a year and a half.
Yeah, like 18 months. So what percentage of the 1,000 people do you think had buyer's regret?
I'm going to say a third.
Okay, what
Yeah, I
do
was
you
gonna
think?
say 30%.
72%.
What?
I know. That's what I'm talking about the articles. That's pretty crazy, right? So 72% of the home buyers had regrets about their purchases during this period, right? So what are they complaining about? They paid too much. They felt rushed when they were buying the property. They wish that they didn't waive the inspection. I know, it's funny, right? We're laughing. It's like, who would
Oh
waive the
man,
inspection?
I still hear that. I still hear it.
Oh my God, are you hearing people waiving the inspection still?
Yeah.
Oh
Go.
my
Okay,
God.
I need your wind mitten 4 point. We waived our inspections.
Oh my God. Oh my God. Right. Oh, well, we're going to talk about that. We're going to talk a little bit about that. So let me see. Okay. Okay. Yeah. So I'm sorry. Hold on. So 72% had buyer's regrets. 31% said they paid over. 31% of the people said they paid over the list price, right? And the average amount they paid was $65,000 over the list price, right? This is across the nation, right? 36% made the offer on the home they bought without seeing it. 36%, 360 out of 1,000 people didn't see the house when they bought it, right? And
if they're paying over and they're waiving inspection and they're buying without seeing, we're talking about like cash buyers here, right? We're not talking about people that are financing. This
oh
remorse
no,
is coming from people.
some of them still finance. Some of them still finance because they might put huge down payments, right? So they might be financing 50% of the loan or 50% of the purchase or 40% of the purchase. But some of them, a decent amount are financed. Probably
Yeah, but they brought a lot of
2/3.
cash to the table at the very least.
Yes, absolutely, and that's why
Yeah.
they could pay over the ass, right? Yeah, but
65,000. That's a lot.
yeah, but if you think about it, from January 2021 until today, the price appreciation, they didn't lose money. I mean, as of right this second, they
Right.
didn't lose money. They had appreciation over that time, but they're still regretting it.
And probably
So-
will continue to. It's not going to be barn burner appreciation, but I'm guessing they'll get year over year for the next handful of years appreciation.
I don't think so. We're going to talk about that in a second. We'll talk about that later today. Okay. I have a different opinion of that. And now some of the big economists are starting to come over to my side. So we'll see if I'm right or not. Cause I was actually starting to think maybe I read this wrong, but I'm not. And I'm not saying I'm 100% right still, but I think that it's leaning more towards what I was thinking. But let's just continue. So with buyers today, this is what I want to tell buyers because we work with many buyers at all different price points. Some of them are very seasoned buyers, some are brand new first-time home buyers, never did anything, don't know anything, right? First thing you should do is tip number one, make sure you get an agent that has your back, okay? So if you're getting an agent right now that's telling you no matter what, Just give them above list, or just give them the full asking price. Just give them the full asking price, or give them above list. You're never going to get the house. Take a step back and say, wait a second. Sales have been slowing month after month after month. We're down about 25, 30% for sales. I'm not talking about prices, right? That tells you that you have more time to deal with this. That means you're not dealing with massive bidding wars. Now, once in a while, you're going to get in a bidding war if you get a super hot property, it's priced right, okay? But most of the times, that isn't what's happening right now. So if your realtor is trying to rush you in like it was June 2021 and trying to rush you into the deal, you better start thinking that your realtor really isn't that seasoned, hasn't been through multiple markets before, and doesn't know when you're going through a market shift. So they're just reacting to the one trick pony that they've knew, and that happens with a lot of realtors. It even happened with me, and I'm being honest with you. When the market changed and the amount of showings started slowing down, I was not comfortable, even though I knew that this is a normal part of the market. It took me a while to adjust to it myself. Can you imagine a homeowner that's just trying to sell one house and doesn't do it all the time? They have to go through a lot themselves, and I do it all the time. So you really got to, so that's the first tip. Make sure your realtor's got your back and not just giving you a flat answer. Just give them what they want. Give them what they want. Don't waive inspection. Don't do it. It isn't worth it, right? It just isn't worth it. Even a brand new home. I remember when we did a final walkthrough through a brand new home, new construction, well over $1 million, really reputable developer. You could not believe the inspection list. This is after punch out and everything that the buyer did, that they found during the thing. Wiring not done correctly, the telephone lines not working, massive bug infestation in the walls, right, that had to be taken care of, right? This is brand new house, never moved into, that the owner decided they were going to do an inspection on at the end anyway, which I thought was a brilliant idea. And the punch out list was pretty dramatic. And they, after the punch out list, but they had a new punch out list based on the inspection. So don't waive inspection. Okay. That's the other thing. Okay. Other thing is, don't be so quick to give them what they're asking for. Okay. Try to see if you can get a deal and find out what other people are paying right now. And the thing that you most care about right now is you want to look at the most recent sales in the neighborhood. So when you're looking at the comps, you want to make sure that like you're staying, like if I just did one for a house yesterday, we really focused on August. Can you imagine? Just August is what we focused on for the sales to determine how to structure our buying offer, because we wanted to see what other people actually are closing at. And most of those sales that we looked at, there were 6 of them. I think 4 out of 6 did not get the list price. So if you didn't know that and you went in and you really like the house that's on the market, you might just, as a reflex, give them full list price just because you think that's what it's going to take to close. But that isn't the way the market is anymore. It's changing. And that's a good thing for buyers. This is good stuff for buyers right now. Yeah. Okay. So the other thing is, the last thing you should do is consider asking for seller contributions. There's a lot of buyers out there right now that have affordability issues, especially under, let's say, the 350, 400 range, where they're having a lot of problem raising the money to buy the house, but they have the credit and the income to afford the mortgage, but they don't have enough money to buy the house. Now's the time where you can actually start asking for a seller concession. And a seller concession is where you're asking the seller to help pay as part of the help pay for down payment, closing costs, and prepaids on the buyer's side to help close the deal. Now, that had been very common for many, many years in a bunch of different cycles as we've been on this show. When things got super hot, you couldn't get a seller concession. It was almost impossible. Nobody even talked about them anymore. But now they're coming back into vogue. Okay. Why? Some of the sellers are realizing right now that is I'm sorry, I was
distracted.
Yes. Private chat thing there. I'm sorry. So some of the sellers right now, they have to sell, and they're finding out that the house isn't selling like a tic-tac like it used to, and they have to sell. So sometimes they're going to offer an incentive in order to get their house to sell over somebody else's. There are signals that you can determine by looking at the listing to find where those houses might be, like the sweet spots or the soft spots of the market. So if you have a good realtor, a good buyer's agent, they can do all of that for you. So don't have buyer's regrets. So here's the takeaways right now for this part, okay? Try not to get a buyer regret by making sure you do your due diligence, you have a good realtor that's got your back, you understand the market that you're buying in, and you don't give away your rights. Keep your rights and do the things that you're supposed to do. Ross, did you have buyer's regret when you bought your house? Because
I closed on the house that we bought in March of 20.
Oh, it was 20. I didn't know that.
Yeah.
You're talking about the condo, right?
Well, I bought the condo in
that's the one I was talking about. Yeah, that's the one I was talking about.
I mean, no, because I plan to hold that thing and rent it out for a while.
Yeah. And on top of it, you were actually thinking of selling at one point because the appreciation was so good during that year. But when we crunched the numbers, it just, even though it looked good on paper, it wasn't really that good, right?
Yeah. So, just hold on to it.
Yeah. So you did an inspection though, right?
Absolutely.
Yeah. So I'll tell you what, it's 9:30. Let's go ahead and take the break. On the flip side, Ross, we're going to get into insurance stuff, a little more deeper in insurance stuff, if you don't mind.
Sure.
Okay.
Perfect. That's a great opportunity. If you have any insurance questions, you got a nice segue. Ross Komarinetz with Brightway Insurance, Juno Beach with us on a Saturday. You got a question? You got a comment? You got concerns in the world of homeowners insurance? Go ahead and jump on board. We got a 4-minute break. We'll get right to your calls. 877-927-6969. Jimothy will line you up. Of course, you make that call. We'll take that call. If you're not comfortable on air, I totally understand. You can always have access to the entire team, including Ross there at Brightway Insurance, Juno Beach. Just go to floridatalkrealestate.com. That's your one-stop real estate shop. Again, access to the entire team. Pros. They are experts in their field. They work cohesively together. And, man, you're one click away to pros at floridatalkrealestate.com. Also, remember, Florida Talk Real Estate on Facebook, YouTube as well. Great resource for a ton of information. 4 minutes from now, we get back at it. Thanks for being with us every Saturday. It's Florida Talk Real Estate right here on Real Radio.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm CBS 12 meteorologist Jennifer Collins. Staying hot and humid through this afternoon with highs in the lower 90s, still feeling like the triple digits. An isolated shower chance mainly inland. Otherwise, mostly clear for tonight as temperatures return to the upper 70s with a chance for a few coastal showers by Sunday morning.
This report is sponsored by Wendy's $5 Biggie Bag. Wendy's Biggie Bag is still just $5. Get a double stack junior bacon cheeseburger or crispy chicken BLT plus 4-piece nugs, small fries, and a small drink. Grab your bag at Wendy's today. Includes choice of double stack JBC or crispy chicken BLT with 4-piece nugs, small drink, and fries. U.S. price and participation may vary. Prices may be higher in Alaska and Hawaii.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
There it is, toll free. If you'd like to get a question answered, you got a comment, you want to jump into a conversation that we're having, don't be shy. 877-927-6969. And of course, always access to the entire team. Florida Talk Real Estate is a .com. We call it your one-stop real estate shop for a reason. You have access to the entire team simply by going to floridatalkrealestate.com. You'll even see the hotline there. It's answered 24 hours a day, 7 days a week by a live body. Again, floridatalkrealestate.com. Great to have you with us on Saturday. We got plenty of time remaining for you before we pass the baton to the locker room. We do that every Saturday. We got you from 9 until 11, 2 hours of infotainment. I'm your boy, Johnny C. Ross Komarinetz is with us on this Saturday. He's with Brightway Insurance, Juno Beach. Ross, how are you?
Doing well. Juno, that's right.
Know it, baby.
It's
Yeah,
weird not having Mike here. So wherever Mike is, I hope Mike's having a good time.
Oh, I'm sorry. Mike is actually having a blast. Him and his sons and his father and his brothers are all up in Canada and they're doing fishing. I think it's fly fishing, but I'm not sure.
Nice.
Yeah, so they that's an annual thing they're doing, and that's where they're going. And Mike was gone last week. I think we all were last week, if I'm not mistaken. But Mike was gone. We're going to be gone last week because there was some kind of jiu-jitsu event that he was doing where they were giving belts out and stuff like that. So I don't know if Mike got an upgrade or not.
I guess we'll find out.
Yeah.
But hopefully they're having a nice trip. That sounds fun. I'd love to go to Canada. There's just too many Canadians.
Yeah, that's the one part about the Canada. When I used to work at newspaper business, there was a magazine that I worked for. It's kind of like a low rent Village Voice type of thing. And it was called CityLink. And one time I wasn't involved in this article. I had just got to the paper, but they wrote a really, really nasty cover story about why South Floridians hate French Canadians as snowbirds. And they had a picture of a big, heavy set Canadian man with the big old belly wearing a banana hammock, right? And that was the cover of the magazine. Well, one of the newspapers up there caught wind of the article down here. It was pretty nasty too, right? All the stereotypes of everything or what you would think. And the papers up there got mad, so they had a feud with us. So I was at the office one time, and everybody started going, ooh, and getting all freaked out. And they got in the mail, they got a box. And in the box was the article laying as liner for the box. And in the box was human waste.
Oh.
And that's what they said to us, and they started a big thing, and it was kind of funny.
But,
So anyway.
Sounds very immature on every front, but also sounds kind of fun. I wish I could have
It
been
was
involved.
actually a lot of fun to be involved.
Yeah,
I do
those are the
appreciate the
sweet
response.
melodious tones of Jimmy D. That's Jim DePola with the Florida Home Pros team. That's a top producing Keller Williams team. Keller Williams Innovations is where you find Florida Home Pros. Jimmy D right there. Everybody.
Hey, thanks. Just want to do a couple shout outs. Good morning, Francis. Good morning, Betty. Good morning, Camille. Thanks for checking us out. I think Camille's new to catching us. So we're on live every Saturday from 9 to 11. And then I see that you're on Facebook. These turns into podcasts on Facebook, Florida Talk Real Estate. So please like and subscribe to the page. And then when we go live, you'll actually be notified that we're live. So go ahead and do that. Thanks so much. So Ross, I want to get into homeowners insurance. I know that we haven't been in happy times lately, but there was an article that I read on Channel 2, which is some other part of Florida, talking about how people have to do upgrades to the house, or the insurance companies are telling them that they're going to be dropped. And I'm thinking, well, we've been talking about that for a couple of years now. But they're talking about how insurance companies are coming in and there's this one homeowner in the article where their water heater is 16 years old, and the insurance company is saying, if you don't replace it, we're not covering you anymore, right? We've been talking mostly about roofs and things like that. But what the article says is a lot of these insurers are doing this because of how much money they're spending for fraud and everything, that they're being super picky with everyone about all the policies just to protect themselves, because they're trying to save money any way they can, because they're just hammering so much. And, as much as I'm not a big fan of insurance companies, and I've said this many, many times, big fan of Ross, but not necessarily insurance companies in general. I got to tell you, there has to be truth to what's going on. How many insurance companies went bankrupt this year?
5?
Yeah, 5, right? And there's 27
This
others
year.
according to this article this year.
Just this year.
Just this year. And I think we only had like 3 and 5 years before that, or something like that.
I mean, it was like unheard of. We had like one in 2019, but it was a small carrier that, like, it just seemed like they just weren't, they just didn't, they weren't they didn't operate well. And then we had one, like a year ago, and that was like, holy cow, I can't really believe that. That's nuts. And then all of a sudden, it's like the
5.
down.
Yeah, 5, and tens of thousands of policies. Some of these were big companies. And I just read an article. Let me see if I can pull it up. I read that somebody's saying that, UPC, United Property, which you heard of, right?
Yeah.
United Property and Casualty, UPC, that's a pretty big policy carrier for the state, from what I understand. And they're talking about not just pulling out of Florida, but Louisiana and Texas and a couple other states.
They did.
Did they? They already did? Because this article is a little old. It's like a week old.
Man, they're pulling game strong.
Yeah, so they
no
pulled
longer have operations. They laid off like all their marketing reps, and
yeah. So the thing is that this is real, that companies are going bankrupt and stuff. This isn't like BS politics or a money grab where they're trying to make tons and tons of more money off you. What they're doing is they're going broke. And I just got a call from one of our listeners recently, just last week, where they were talking about they're going to sell their house, but they're going to put a new roof on their house first, because an insurance company called them up and said that they can get a new roof based on hail.
yeah.
The
insurance company didn't call them. No, a roofing company.
A roofing company called them.
Not the
And
insurance
so
company. Yeah.
she's in the process of being with the roofing company who gave them an adjuster, who is now trying to get a full roof replacement for hail that she doesn't even know about. They're telling her what day the hailstorm happened.
That's right. Yep.
So
what's
that's
going
pretty
on.
crazy, Ross. That's pretty
And
crazy.
so that's why the insurance companies are saying, okay, well, we're not going to insure a roof over 10 years old because we don't want to argue whether that is actual damage or it's been baking in the sun for 17 years, or somebody went up there with a hammer and just kind of knocked on it a couple times, because that's happening too. Roofers are going up there breaking tiles and going, oh yeah, I can get you a new roof, look at this damage from hailstorm.
So and it happens all the time. I actually see bandit signs. Bandit signs are those signs that you see, just like the little cheap signs that you see shoved into the ground at stoplights and intersections and stuff. Those are called bandit signs, right? A lot of them are like buy house fast for cash, those kind of things. I saw signs just recently. I don't remember which county it was because I've been all over the last couple of weeks, but driving around where the sign was call for roof replacement, and it was like a roofing company saying call for roof replacement, let your insurance company pay for it, kind of thing.
Jim, I don't know if they still there, but there used to be spots that would run on the regular on this station, like regular advertising.
Really?
Like, hey, give us a call, you might be able to get a free roof.
I didn't know that.
Oh, I'd hear it all the time. I don't know if they're still on. I'd hear them on other stations too. I mean, advertising works, especially when you start saying things like, you want a free roof?
Free roof, dude. I mean, that's 15 grand.
What I don't get is how does
just like, I'll take the free 15 grand.
What?
Hey,
How do
you're insured for the next 10
How
years.
do other states though deal with this so that they don't have the problems Florida has? That's the part I don't get. It's like, why is it just it's happening in Florida because the regulations allow it to happen?
Well, no. So
No?
it's litigation. It's the way
Okay.
that the way that we're able to litigate compared to other states. Like
That we have more rights for litigation than other people or something?
I think I think in other states, like attorneys' fees are limited, like attorneys here can just make so much money suing everybody.
Yeah.
And I don't believe their fees are limited. So it's the way it's just, we're a very litigious state, Florida is.
Right.
So it's not just unique to like property and casualty claims. Like there's just a ton of litigation here. And that's why, all our billboard or up and down 95, all those billboards are all attorneys.
Yeah, I got $1 million from my lawyer, right?
Yeah, that's true. And then, so, United is going away or has gone away. And so Ross, when they did leave and those other companies left, what did your life turn into? Because, you're a pretty big insurance branch around here. So you must get dozens of calls, if not more, from people going, hey, I just got notified. Hey, I just got notified. Then what do you do? Like, you must go into action mode, but like, how do you solve that problem? Is it always one answer? Citizens? Is it kind of like that now?
For UPC, I believe at least bankers also pulled out of Florida too. And they're going to slowly non-renew. They're not just canceling everybody. They're just non-renewing. As that policy expires, they're just not going to renew. So it's not just this frantic thing. But when, St. John's goes out of business, or who was the last one? I can't remember. Southern Fidelity goes out of business. We have like 30 days to rewrite all those policies.
Wow.
We have to grab our list and just start requoting them and sending them out. And hey, we need inspections. And, on top of, thankfully we're a very, busy new business agency, bringing on new clients all the time. But so, on top of just that new business stuff, we were having to, on top of rate increases, just in general, we've pretty much shopped our book every single year, like the entire thing.
So,
which you don't really do normally. You may do like 10%, shop 10% because of rate increases and things like that. But with all, companies going out of business and rate increases, it's just been
So if you had, let's say I was with you and I had St. John's or Southern Fidelity, and you find out that they're shutting down immediately and you got 30 days, do you automatically reach out to the customer? Like, do you go through your database and go, here are all my St. John's, and we got to reach out to them right away and tell them they got a problem? Or is it more like that they're going to call you, hey, I got a letter from St. John's?
So we're like an automated email goes out to them. Hey, well, here's what's happening.
Okay.
They're getting notified by email. They're getting notified by the mail. And then we're also sending a quote that says, hey, in an unfortunate turn of events, your carrier's gone out of business. Here's a replacement quote. Here's what we need. Let me know.
Yeah. And then
we always see these little potentials for, we call them like bubbles. Remember, what was it, like 5 years ago, Jim? We had this huge batch of HELOCs that were maturing.
Yeah.
Home equity lines of credit. So these little bubbles. And I know this is a tough thing to guesstimate, Ross, but so the process is typically, and I know they're going to vary, but so you get this notice that you're being dropped, or your provider's being, they're insolvent, they're closing out. So you got this scramble, you get on the phone, Ross Komarinetz, Brightway Insurance, Juno Beach, right? You get in the process going. Oftentimes, I'm going to guess, people will say, I'm going to have my bank go ahead and just handle the payment due for my new policy, because you got some costs that's up front when you're doing this, right? So then when they get the reimbursement check from their old policy, the cancellation, whatever's remaining on their policy, right, they're going to get a check. I guess in the best case scenario, they dump that right into their escrow, right? If they're paying for their insurance through their escrow, they put that in, they're kind of back to where they were flush. They're probably going to be under, because their new policies more times than not going to cost them more, right? In your guesstimation, I know it's a hard thing to guess, but my feeling is so many people are going to have their new bank pay for it. When that check comes in, they're not going to put that in their escrow. And then they're going to have this whole new adjustment in their escrow. Their mortgage payments are going to go up probably way more than they should. And now they're going to find themselves in this weird pinch. What do you think the number is of people that say, I can't afford to not use this money? I can't put it in escrow. I need it for my day-to-day. And then they're going to really be behind the eight ball. Do you think it's prevalent? I know it's hard for you to tell, but what do you think?
No, I mean, I doubt it, because people pay attention to their escrow. I get a lot of people that really pay attention to their escrow. And when these companies go out of business, sometimes that refund doesn't get sent out. Hey, if policy canceled on June 29th, that refund's going out on June 29th. Sometimes it could take 60 days for that refund to go out. And I would, we get people that are, hey, I didn't get my refund yet. Hey, you said I was going to get my refund from that company that went out of business. I need to get it to my escrow. So I don't know. I don't think that that's going to be an issue, because the bank is sending you a notice too, saying, hey, your escrow is short. You need to make that up. And so I think at that point they're, looking for that to make it up. You know what I mean?
Sure. Yeah, because I know, at least
I don't know.
My experience was they're like, hey, you can either pay this right now, or we'll adjust your mortgage payment to this moving forward, and you have that decision to make. Would you rather pay that much more every month, or are you going to, make it even out right now with a one-time payment? And I just feel like the financial situation for so many folks is where they're going to end up keeping that money. It's worrisome for me.
But like, let's say your premium was $3,600 and you used half of it. And then the mortgage company had to pay $4,800. Now you're down $6,400.
Yep.
And that's a big number that if they're going to tack that on, that's a very big number.
It's over $500 a month.
Right.
Yeah. That you're paying extra.
That's
and
right.
So I think most people would probably want to get that refund back to the mortgage company and not, I don't know, when, as long as we get the check and their house is insured, that's what we're happy about. Yeah.
Absolutely, they're covered, and I know that's that's all the bank cares about too. As long as they're covered, I just feel like this is going to be the next kind of hurdle for a lot of folks where money's tight. You're pressed right to your budget. If this happens to you, be as strict as you can about getting that money back into your escrow, because when you kick that can a little bit, you're going to find yourself in a really tough spot, and then you're struggling to make your mortgage payment because you got to catch up on your escrow. Look, you're going to have to catch up anyway. Please try to be sound in your decision making when you're getting that money back. I know times can be tough, but I'm really worried that that's going to snowball for a lot of folks. And once you get way behind, we all know how tough that can be to climb out of that hole.
Yeah. And
Yeah,
what's nice though too is, sometimes the premium was a lot more, sometimes it was fairly similar, and sometimes it was a little bit less. Just because if somebody had that policy for a while and the rate wasn't going up very much, and maybe Citizens, 4 years ago we would never even think about shopping Citizens,
right.
And so now Citizens is kind of it, and so Citizens kind of has those artificial rates because how much they can charge. So sometimes people were able to save a tiny bit of money, or it was pretty similar. So. It hasn't been all nightmarish, but there are a lot of bad dreams.
Yeah, we always say every situation is like a snowflake, right? They're all different, and yeah, some people's experiences haven't been terrible, and others have been really bad.
So let me ask you a very basic thing about insurance. So let's say we're going out to a house, and let's say there are two identical houses in the same neighborhood, same age, everything. Okay. The only difference is one house has complete hurricane shutters or hurricane protection around the whole house, and the other one doesn't have any. It just has the windows and that's it. Okay. Is there a huge difference in the insurance policies in general by not having anything versus having complete whole house protection? Ross, I know you're giving me
it all depends. It all depends.
Well, why would it depend? Because my question is, if you have nothing, that should be very easy answer, is that you're going to pay a lot more money than the person that has complete protection.
So what do you think that discount? So what do you think it should be?
Right. So that's why I'm asking
what do you think it should be? Because I get this question a lot.
Right. That's why I'm asking you.
On people who are paying like $2,400, mm-hmm. And I go, it'll save like $200, and they're like, that's mm-hmm. it. And I go, okay, well, what do you think it should be? $1,000, $1,500?
Right.
You think your homeowner's insurance should be $800 a month or $800 a year because you have hurricane shutters?
Because you covered a window, right?
Yeah. So
that makes sense. And 200 on 2,400 is almost 10%.
Yeah.
Right.
I figured 10%. When you asked what do you think it should be, I went 10%.
But really it all depends, because there's an overall maximum wind mitigation credit that the carriers will have. Mm-hmm. So like, okay, just for round numbers, if the maximum that you can get is 50% discount, right?
Wow.
Mm-hmm.
No, I'm just guessing. We're just
he's throwing out. He's just throwing out fake
that's
numbers.
Actually kind of the real thing, because if you call me and say, "Well, hey, that quote you sent me, I didn't get a wind mitigation report. How much is the premium then?" 90% of the time, double it. So that's about right is about 50%. Now, I had an older roof. Now I have a brand new roof, so I should get the FBC credit. Now that discount might be 30% by itself, mm-hmm. assuming you're not getting other credits. Or it could be, hey, I have opening protection. I have hurricane shutters. How much is that? Well, that could be a 45% discount by itself. However, if we're getting the new roof credit already, if we're getting the right credit for the thickness of the plywood and the spacing of the nails, if we're getting the right credit for, the straps, if we're getting the credit for having a hip roof, getting that opening protection discount might only save 5%. Do you know what I mean?
Yeah, that makes sense.
We're already getting all of those,
all the other stuff into it, right? So let me ask you this question: when you're getting a new roof, the thickness of the plywood, the spacing of the nails, the strapping. Let's say you have an older home. Do most roofers automatically, just as part of getting the new roof, do all of that stuff automatically so that when you just buy the new roof, you got everything? Or do sometimes the insurance company say, oh, can roofers get a pass a final building code, but let's say only use 1/2 inch versus 5/8 plywood? I'm just making it up. I don't know if it's 5/8 and 3/4, but
I mean, I don't know what the regulations, I don't know what codes are or anything like that. But
right.
I mean, you don't even have to replace the plywood. You know, you can just throw, rip up the shingles and lay down new shingles.
Right.
Some people, that's all they do unless the plywood's like deteriorated.
Right. But you get more credit if it's a thicker plywood?
The thickness of the plywood, the type of nails that are nailing it down, and the spacing of those nails.
Okay. That's interesting about all that. So
it's question number 3 on the wind mitigation report, if you want to kind of look at different options.
Yeah, and I wonder when you're getting a new roof, if they're like, here's like our general roof, and then you're like, well, I want to be able to get all the credits I can when it comes to my reports for my new roof. Like if there's step ups, I wonder if they kind of piece it that way.
So, I mean, again, yes, you can, okay, hey, I want to replace all the plywood, and so, okay, I want, the correct thickness of the plywood and the correct nails spaced in the right way. Then you can get that secondary water barrier.
Mm-hmm.
To go, because there's going to be one underlayment underneath the shingles or tiles, and then you can get that secondary one, which gets you a little bit of a discount. And then whatever your metal, shingle, tile, whatever you want to do,
and you're strapping, right?
But typically you can't just add single wraps, but you can make sure that you get the metal connectors and you can get the clips credit. But we don't see that nearly as often as we have been in the past.
So when you're buying a new house, when I say new house, let's talk resale, not new construction. So when you're buying your home, at what point should you start thinking about the insurance as you're going through the home buying process? Like as soon as you get in contract, should you be talking to the insurance company? Because usually a lot of times people don't talk to the insurance company until after the inspection and the appraisal, and then they're in the final throes of buying the house, and then they go to the insurance company.
Yeah, when it's time to bind it, right? They're like, "Oh, we need insurance."
Yeah, we need insurance. It was almost like an afterthought, Johnny. Right?
Not Florida Talk Real Estate.
No.
You guys are in constant conversation with Ross.
Yeah. So, at what point, though, Ross, do you recommend that the homeowner start talking to you about the insurance?
I mean, as soon as they go under contract, that should be the first thing they do is get a quote. Because if you wait till you get your inspection and then you kind of have to think about you will know what that premium is based on what we normally see on those wind mitigation reports. So you will have an idea, and then when you and we're going to tell you exactly what inspections we need. And so you're going to get those inspections back to us as soon as you got them, and then we'll be able to tell you, here's what the premium is, or if the house is even insurable. So then you know exactly what's going on.
I just want to leave off on this, and then we'll take a break. I had a case recently where an agent who was very inexperienced had a wind mit report done on a house and an inspection, and they said that the house had only 1 to 2 years left of useful life. That was it, 1 to 2 years, right? And I'm like, well, is it 1 or is it 2? I thought that it had to be very specific, but then I called you and you talked about that you're allowed to do ranges on the wind mit, like you could say 3 to 5 years or 1 to 2 years or 18 months. So that was
Just
okay.
to clarify, we're talking about the 4-point inspection.
The 4-point, not the wind mit. Did I say wind mit? I'm sorry, 4-point. So what ended up happening was they wanted a credit for the whole roof. And I said, great, give us the 4-point inspection to show us what's going on with the useful life. And they said, well, it's in the inspection report. And the inspection report looked pretty clean, okay, on the roof. So I said, well, it doesn't talk about useful life in the inspection report. And it says the fascia is good, the soffit's good, there's no signs of water infiltration in the house, the sheathing's good. So what exactly is making the useful life so low? And it could be just baking in the sun, like Ross said. I'm not saying it's wrong.
Well,
Just show me the
here's what
report.
a lot of inspectors do is they just say, oh, it's a shingle roof. The maximum for a shingle roof is 20 years. So I'm only going to give you whatever that difference is, instead of actually looking at the roof and go, oh man, this roof is actually great. It's got 10 years of life left, no matter how old it is. Do you know what I mean?
Mm-hmm. That's true. And so I asked for the 4-point inspection so I could see what they're going to present to the insurance company that they're going to pick, to get the insurance. And they wouldn't give me the report. They said that it wasn't important for us to have it. And I said, this is the first time in 10 years that I've asked for a 4-point, and they won't give it to you. And I said, so that tells me either that the useful life is much longer than what you're saying, and you don't want to give us the report, or they told us, the inspector said that there's no need for the seller to have the 4-point inspection, and that there's no need for it because I gave you an inspection report. I just thought that was kind of interesting.
It's funny. There's a lot of inspectors that are in the real estate and insurance business on the side, I guess, because I get a lot of people that say, well, the inspector said the insurance should be more than $2,000 a year. Okay, then call your inspector and have him get you a policy. You know? And then now you got inspectors advising people on real estate transactions.
Yeah, I thought that was really funny. I actually told the agent, because she has not done one transaction yet. This is her very first transaction. So I said, look, I don't know who your inspector is or anything, but one or two things is happening here. My instincts are saying, my spidey sense, right? Either your agent, your inspector, knowing that you're inexperienced, is actually trying to be a show off and a know-it-all and trying to tell you how to do things because that's just the way they're built, like psychologically, or you're playing around with the numbers and you're trying to get a credit for the roof reduction, but then you're going to turn in a different report to the insurance company where you're going to say, hey, I got 7 years life of useful life left, right? And at that point, if you had 7 years of useful life, the chances of the sellers trying to give you a credit for that is not very likely, right? Now, 1 to 2 years useful life, very serious. And even 3 years, right, Ross? Because at 3 years, if you had 3 years useful life, you're really kind of on the bubble a little bit. Because if you're the buyer and you buy it and you can get insurance on that year, what's going to happen? Let's say 3 years is the minimum useful life you need, which is Citizens right now, right?
Mm-hmm.
So if you buy a house and it has 3 years useful life and you get the insurance, what happens the next year?
You're either going to, if you do not replace the roof
Mm-hmm.
and provide proof of roof replacement, they're going to issue a non-renewal. However, if you have a roof certification that says there's at least 3 years of useful life left, again, they'll renew it.
Right. So every year you would have to go back and prove to them that you have useful life, and you just do a report every year until you just couldn't get that report anymore.
Yeah, until it does go to 2 years of useful life.
Yeah, until
you
it
need
gets
to get the new.
yeah.
the new
So the
roof.
thing is, so a lot of sellers have this thing about the roof. Oh, my insurance company's okay with my roof. And I go, yeah, they're okay right now, but you don't know what the new insurance company is going to feel about your roof. And that's what really matters. It doesn't matter what your insurance company currently says. And then they say to me, well, why don't they just get insured through my company? And I go, the company, and tell me if I'm wrong about this, Ross, the company is going to look at the house differently while it's being sold than under the current policy it's under.
Well, 90% of the time, their current company isn't even offering coverage. So,
Right. Yes,
I get that all the time. People will send me, well, here's the seller's current insurance. I'm like, well, that was great 5 years ago.
Mhm.
Now that company they haven't offered new business in 2 years.
Yeah.
You know?
Yeah, they're keeping the old business, but they're not taking on any new
And
business.
even so, and like you said, even if that company is offering coverage, chances are they're not offering coverage on your house anymore, nor would they even think about insuring that roof today.
Yeah.
You know?
So if your roof if your roof is, in my opinion, 15 years or older, you got to start having, and you're thinking of selling your house, you have to have a plan on what to do if the house doesn't have enough useful life left on the roof. And one of the problems you can do one of the issues that makes it hard about this, you can't just get a useful life report from an inspector as a seller and then give that useful life report to the new buyer to say, here, it has 5 years of useful life, use this report, because they're usually not transferable. And I don't understand why inspectors do that, but inspectors a lot of times they only want to give that report and to use the report for the person buying the report, not for future use. I don't understand that part.
Well, because if I do a report for you for $100, and then Johnny's like, I want to use that report. Well, now I just lost $100.
Oh, I see what you're saying. Make it to him again. Yeah.
Yeah. But I mean, at the end, but what you can do is if you're the seller and you have one that says it's 5 years and the other guy says 1 year, be like, well, I've got one. If you really want to buy the house, this inspector happens to think, call this inspector,
Yeah.
You can always use the same inspector that'll give you the same.
Yeah. Have them come back out. Yeah.
The answer is still the same. You just have to pay $100 for it.
Yeah. Exactly. So everybody, look, there's navigating the insurance market can be tricky.
I've heard that before.
I heard that once or twice.
There's one spot that is really a pain point right now. If you have a shingle or tile roof over 15 years old and your dwelling coverage is over 700,000, so that's probably about a 3,500 square foot house. It's nearly impossible to get anything close to affordable.
So because you're kicked out of insurance, you're kicked out of Citizens, right? Because Citizens has a limit of 700,000.
Right. And then it is very difficult to find people who will take a tile or shingle roof over 15 years old. And so that's the pain point right now. You're seeing premiums go from 7,000 to 20.
So they only want metal
roofs. That's it.
Well, metal, they'll go up. Most carriers will go up to 20 on a metal roof, but those aren't most of the homes built, a bigger 3,400 square foot house, built in 2000 has a tile roof.
Right.
And that's where we're seeing the biggest pain point.
Cement tile roofs. You're talking about those kind of tiles like barrel tile or cement tile, the square kind?
Yep. 15 years old, or if it's over 15 years old.
Even though that the manufacturers say 40 years usually for those roofs? Yeah. I'm not beating you up, Ross. I know you're just the messenger. I'm just asking. I'm asking you.
Well, yeah, no, but I mean, that's like saying, well, on the manufacturers will give you 20 years on a shingle roof. The insurance companies are saying replace that at 10.
Yeah. That's pretty crazy. I don't know how this whole thing's going to be solved, but this is right now, it seems like to me a legislative problem that the government's got to step in and do something. They had that special hearing a couple months ago. Obviously that didn't help. Okay. It didn't help. It didn't help the way that they wanted it to help. And the need is so huge.
You're sounding very socialist when you say the government needs to get involved, Jim.
Yeah, well, government's here. We're here to help you. What's that sign? What's that line? We're the government. We're here to help you. Yeah.
Not my country.
It's like, oh no, not again. Get the hell out of here.
There just needs to be less of an incentive for the attorneys to profit from the claims.
But that's the legislative part where they create the laws that preempt that from happening.
Here's something real quick about attorney and how attorneys are just messing everything up, right? So I had a national auto carrier come in, and do their kind of quarterly, hey, how are things going? Here's what's going on, blah, blah, blah. If you have in Florida, as long as you have comprehensive coverage on your auto insurance, if you have a crack in your windshield or damage to your windshield, you get a new windshield. You can just call Safe Light. They'll come out and change it out and whatever. I'm sure it's probably $1,000 or whatever it costs for a new windshield by calling Safe Light. Somehow, attorneys are getting involved in these little claims and having people sign an assignment of benefits form where they're transferring the claim to the attorney. And she told me that the average windshield claim with an assignment of benefits with an attorney involved is $12,000.
Stop it.
Come on.
Stop.
Well, what?
I'll
Okay,
give you
so
my whole car.
How it works. I have no idea how it works.
yeah, because like, can you imagine
However-
you're driving down the street, a pebble hits your windshield, it cracks, right? So normally you call like that type of company, they come out and either they glue it, they put that glue in there, or they take it out and they put a new one in. But where can you cite the insurance company for damages because the pebble hit your windshield?
I have no idea how it works. She had just told me that is a big thing right now in Florida is assignment of benefit claims on windshields.
Hey, Johnny, I'm going to throw a rock at your window today. Okay, we'll split the money though.
You got to call you got to get the attorney first.
$6,000, right? We're going to make $6,000 each, right? Oh my God. That's
the
crazy.
Get involved, and you just have to have it. There needs to be less of an incentive for attorneys to throw crap at the wall and see what sticks.
Yeah, it's Florida stuff going on right now here, right? That's why I have a website I haven't turned it on yet, but it's called Welcome to Florida, DUH, right? Kind of a homage to Rich a little bit, Dr. Rich. He used to love saying "Welcome to Florida." He always gets called Florida, like a lot of people. We're going to just plow through because we only got 15 minutes to 10:30 break. So, Jimothy, we're going to do 10:30. Is that all right?
No problem, buddy.
Okay. So,
just for clarification purposes, if you're newer to Real Radio, Dr. Rich was a mainstay on this radio station for decades. The Love Doctor is a show that is no longer on the station, but definitely if you've been listening to this station for a long time, when you hear Dr. Rich, your ears perk up and you have fond memories for sure. We'll do a little quick reset. We get back at it. We got a ton of information still coming at you and plenty of time for your phone calls with your questions, comments, concerns. Still plenty of time on a Saturday at 877-927-6969. Always remember you have access to the entire team. Your one-stop real estate shop is FloridaTalkRealEstate.com. You got the entire team there. You got a hotline as well, 888-973-7828. You can call it 24 hours a day, 7 days a week. Get a live body. Get the ball rolling with whatever you're trying to get done. Buying a home, selling a home, you're stuck with a home, you don't know what to do. Maybe you're looking to refi. Maybe you are choking on the fear of your property insurance that's going through the roof. Let Ross show you some options that are available. Let him be the one that's dealing with all the stress, not you. Go to the pros, get the information that you need to help you get through what you're getting through. And Ross doesn't have grays. Look, he handles
there's all those grays in there.
I think that's why he did the fade, because he's trying to get the grays out of there.
So let Ross take the stress. He will take it all on his broad shoulders, and we'll get through the finish line together as a team one way or another. FloridaTalkRealEstate.com. You got to go to people that are not only good at what they do, find ones that are great at what they do, and hold on tight. FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
This is WZZR FM, West Palm Beach, Real Radio 92.1, powered by the law offices of Anajar and Levine Accident Attorneys. Been in an accident? Call 1-800-747-FREE. That's 1-800-747-3733.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Prime CBS told meteorologist Jennifer Collins, staying hot and humid through this afternoon with highs in the lower 90s, still feeling like the triple digits. An isolated shower chance mainly inland, otherwise mostly clear for tonight as temperatures return to the upper 70s with a chance for a few coastal showers by Sunday morning.
This report is sponsored by Wendy's $5 Biggie Bag. Wendy's Biggie Bag is still just $5. Get a double stack junior bacon cheeseburger or crispy chicken BLT plus 4-piece nugs, small fries, and a small drink. Grab your bag at Wendy's today. Includes choice of double stack JBC or crispy chicken BLT with 4-piece nugs, small drink, and fries. U.S. price and participation may vary. Prices may be higher in Alaska and Hawaii.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit.
Yeah. Okay, man.
Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it. If you dial it, 877-927-6969, Jimothy will answer. He'll be all like sweet tea and everything. Maybe even get you some horse divorce to line you up while you're waiting. It'll be a quick wait because if you make those calls, we take those calls. We love talking to the people with your questions, comments, concerns. Plenty of time for you on a Saturday. Again, 877-927-6969. Thanks for being with us, Florida Talk Real Estate. Always remember, Florida Talk Real Estate is .com. It's your one-stop real estate shop. You get the entire team at floridatalkrealestate.com, like Ross Komarinetz with Brightway Insurance, Juno Beach, 1 or 2 clicks away. Hello, Ross. How are you, my friend?
I'm doing well. Hello, everybody.
Always fantastic to have you with us. Jimmy D, also a couple of clicks away at floridatalkrealestate.com. Jim DePola, I've told you for a long time, runs a top-producing Keller Williams team. It's the Florida Home Pros team with Keller Williams Innovations. How you doing, Jimmy D?
I'm doing good. Happy South Florida, everybody. Ross, thank you for such good details on that last segment. If you have questions about homeowners insurance, you got to check out the last segment we just did because we had a lot of great info. And if anytime you ever need insurance needs, you got to call Ross. And Ross, we always talk about homeowners insurance, but you do cars, motorcycles, What do you call those policies like for your jewelry and stuff like that? I forget.
They call them inland marine. That's called an inland marine policy.
Never knew that. But you do all of that stuff. So you do everything but life insurance, basically. Is
Everything
that
but health insurance.
health insurance.
Can you insure my legs like Mary Hart?
Probably. I'm sure we'll just find it through Lloyd's of somehow.
My man.
There you go.
Nice to have you on speed dial.
Well, I already have that policy on your vocal cords.
True. I think
that's a $17 million policy.
There you go.
And that thing. My wife, every time she makes that payment, she's like, "We're still doing that." I was like, "Yeah, it's still a thing, babe. Gotta keep them going."
Exactly. Hey, we always try to talk about programs that could help people. We've been doing that for the whole 10 years we've been on the show. So today's no different. Bank of America just announced a new program for first-time home buyers for minorities, and it's only going to be in certain areas. It's Charlotte, Dallas, Detroit, Los Angeles. Wouldn't care normally for our show, but also Miami. Okay. So certain parts of Miami, if you buy in there, if you're Black or Latino and you're a first-time home buyer, you're going to be able to possibly qualify for a 0 down payment loan with 0 closing costs. And Bank of America is doing this. I hate to say this, but I don't think it's out of the goodness of their heart. Bank of America and Wells Fargo. Bank of America bought a company, kind of forced to buy it, but they bought a company called Countrywide. Johnny, do you remember when we used to talk about Countrywide in 2012 through 2014?
Of course.
All we did is talk about Countrywide, right?
I knew somebody that worked there, and they said they would print their own W-2s.
What? You're not allowed to do that? We're not supposed to do that. So Bank of America with Wells Fargo and a couple other companies. And when I say Bank of America, is really more Countrywide. They were proven and paid hundreds of millions of dollars in fines to have treated minority homeowners, buyers differently than white buyers, as far as charging higher interest rates or denying loans for them through what they call overlays, which are exceptions or additions to requirements required by the federal government to get a loan. So in order to make up for that, Bank of America now is launching this new program. The program sounds pretty good if you take it. Now, it says it's only in select neighborhoods, so I don't know everything about the program. But some of the benefits is that there's no PMI.
I want to make sure I'm following. To make up for screwing other people, they're going to take care of future people?
Yep, that's what they're doing. It's kind of like, that's the way they're doing this. I don't write the laws. I'm just reporting what's going on out there to help people, right? So just to give you an example, during this time where this abuse was happening, 72% of the homeowner rate was for white households. 72% of homeownership was white households. I should take that back. 72% of white households owned a house, compared to 51% for Hispanics and 43% for Blacks. And they said that 43% for Blacks is actually lower than it has been since 2010. So from 2010 to 2020, Black homeowners, Black households have been less and less homeowners over that 10-year period. And part of it they feel was disproportionately because they were treated differently as borrowers than white borrowers. So that's why they're doing this. I'm not saying it's good, right, or different. That's just the way it is, right? Yeah. Miami actually sued JP Morgan Chase over this in 2014, accusing the bank of predatory lending. Okay. And in 2012, Wells Fargo paid $175 million for these problems. I don't think they admit that they did it, but they paid the fine, right? And Bank of America through Countrywide in 2011, they had to pay a $335 million fine for this. So apparently it was very serious. I didn't really see any of that as a realtor during that times when I work with minority homeowners. Maybe it's because of the lenders I chose. right? Working with like Mike and stuff, we didn't really have to worry about that kind of stuff.
Yeah.
So, so anyway, that program's out there. If you have any questions about it, you can give us a call, but that's going to be a Bank of America program. They don't have a name for the program. So just Google Bank of America first-time homeowners and minorities, and I'm sure you probably get some information on there. Okay, or call your local Bank of America.
And I wonder what the fine print says on there. I wonder if you just got to get like a 23andMe that shows that you have like a 0.5% in your bloodline somewhere, and all of a sudden you're like, down.
Oh, I know. It's kind of like when that building collapsed in Surfside. Apparently, all of these people from around the world claimed that they had rights to the lawsuit for the building collapse down there because they were related to people that they weren't really related to.
Well, wasn't that number like $1 billion? Isn't that what you...
Yeah.
So
But
you start throwing numbers around like that, and I'm like, I'm pretty sure I'm involved.
Yeah.
It doesn't even occur to me that people would think I'm so, even though I'm a former crime reporter and I should know better, it doesn't even occur to me that people would think that way. Oh, wow, some people are getting $1 billion. I want to see if I can get a piece of that. I just don't get that part. So sorry, I'm very naive.
Yeah, I don't get it either. But like in today's environment, I go, oh, that makes sense.
It makes
I know,
sense.
right? Exactly.
Like, I don't understand
think
it,
that way, but it makes sense. Yeah.
Other news is Palm Beach County. Okay, so we've been talking about how the Miami Metropolitan Statistical Market Area, which includes Miami-Dade and Broward. I'm sorry, I said that wrong. Miami, Broward, and Palm, the three-county area, that is the worst rental market for affordability in the whole country. Forget about Manhattan, forget about San Francisco. This is the worst part of the country for renters as far as affordability. Well, there's been a lot of talk about what they can do, and a lot of people are talking about things like rent control the way it is up in New York. And I don't really understand rent control that well because I was never really involved in it. So I'm being honest with you. But there was a really good article in the Palm Beach Post a couple of days ago talking about how Palm Beach County has passed unanimously an ordinance calling for a 60-day notice if you're going to increase the rent by more than 5% or terminate the lease. So if the landlord calls you up, Johnny, as a renter, I know you're not a renter, but if they called you up and said, hey, we're going to jack up your rent, and if you don't do that, when the lease ends, we're going to terminate the lease, they have to give you at least 60-day notice. Okay? Now, if they don't, they actually put some teeth into this law or ordinance. If they don't, first-time violators, meaning the landlords, can be fined $1,000 per day. Now, I want to talk to you about that in a second. $5,000 a day for repeat violations. So if you're a landlord and you've got multiple properties and you do this a couple times, you get caught, it could be $5,000 a day and up to $15,000 per violation if it's found to be irreparable or irreversible to the renter. The landlord could be charged up to $15,000, right?
So, when you say a day,
I don't get that
assuming
part.
that they leave the rent increase. If they bump it back, the fines stop. Is that?
I don't think so. I understand what you're saying because I don't understand the per day part either because it doesn't really explain it.
Maybe if they only if they only gave them 30 days notice, then they're going to fine them for 30 days.
That's what I'm thinking, Ross.
30, like that difference between the amount of time that they notified them and that 60-day mark.
Okay,
Yeah,
maybe that makes sense.
That's what I'm thinking. Now, the current state law only requires 15 days, but the county ordinance is going to supersede the state law in this case. And there are other cities that are trying to enact their own rent control situations. The most recent one that's coming up is going to be Lake Worth Beach. They're actually talking about pulling in. There's a regulation that says if rent control can be handled by the city government if the controls are necessary and proper to eliminate an existing housing emergency, which is so grave as to constitute a serious menace to the general public. So if the Lake Worth Beach City Commission feels that that's what's happening, then they're going to be able to kick in whatever kind of regulations they want to do. Okay. So any city that doesn't have regulations, the county regulations is going to be it. So if Boca Raton doesn't have any of these regulations, the 60-day notice is going to be it. If Boca decided they were going to do a 30-day notice instead of a 60-day notice, I don't know what would happen. That might supersede the county ordinance or not. So this is going to be kind of interesting to see what happens
feel like
with this.
60 days is fair.
It is.
Normally, I don't like when like the government, the governments try to get involved in markets, but like 60 days is pretty fair. Like you kind of know like what your costs were and what you anticipate your rent should be, as a landlord by that point. I feel like that's fair. I feel like 15 days is way too short.
Well, yeah. I think there's also an element here where like you hear that and you're like, oh, good. From a renter's perspective, you're like, well, that's great. But all we're doing is just giving you 60 days to know or raise. They didn't cap how you can raise the rent. So I can be like, hey, in 60 days, I'm doubling your rent.
Yeah. But and that's fair, because and again, with like rent controls, like Lake Worth Beach, like, okay, that's probably, people want to live by the beach. So they're going to pay more for that. Market's going to drive that up. People will pay less to go live in Belle Glade. I'm just throwing that out there. Further, if you go all the way out west, it's going to be cheaper. So I get
this is
for sure.
Here's an interesting stat related to all this that you guys are talking about. The article says that as of early 2021, there was some kind of study done, and in early 2021, this is for Palm Beach County, about 40% roughly of households were cost burden, meaning that they were paying 30% of their income towards housing. That would be considered cost burden. And so that's 40% of the households. And they said nearly 30% are severely cost burden, 30% severely cost burden. And that means that they're paying 50% or more of their income just for the rent, right? So that's why they're trying to figure out how to handle this. I don't know how all this is going to turn out. I see both sides of this. Like you're saying, I almost feel like 90 days would be almost better, because the homeowner, the renter needs time to save. If they're leaving, they're going to need time to save first, last security and all that to move on to the new place. So I think that 90 days would be better, but 60 days is definitely better than 15, because 15, you don't know how many calls we get. Our show gets calls off air about people saying, yeah, my landlord just jacked up my rent to this amount. What can I do about it? Like they want to sue somebody or fight them in court over it, right? So I used to say there isn't a lot that you can do, but now this gives a little more teeth to it. But so just beware, you do have some rights. It looks like things are going to be changing on this front more and more over time, and we'll keep an eye on it and see how the news changes on this. But I think this is going to morph into more and more stuff later. It might fizzle out to nothing, but legal aid is saying this is a very big deal. The County Legal Aid Society, 3 out of 10 calls are calls about excessive rent increases right now. 3 out of 10 of all the legal aid calls, right? Now, back when we started the show, almost everybody called because they were in some type of foreclosure and they were being foreclosed on. That was the legal aid need back then. Now, 3 out of 10, it's rent. So big deal happening over there. Let me see. Okay, do you mind if we go into a little bit about the economy, because we got a little bit time left? Are you okay with that?
Hey, we're kind of brushed up against it when we're talking about rent increases. I mean, that's an aspect of the economy, absolutely. So let's.
Are we seeing some of those rent increase, like the rent increase is kind of stabling or coming not as bad?
The Post had an article out a couple of days ago saying they think it's starting to flatten out a little bit. It has to flatten out if you think about it. It's just a natural occurrence, because the landlords are going to find out the most money they can get until they can't get it anymore, and then they're going to scale back. That's just natural gluttonous profit, right? Which I'm not necessarily against all the time. But so I hear it's starting to flatten out. I know that I just went through a rent situation on mine. I'm renting right now myself by choice, and I had to actually end up paying 15% more than I'm paying with my current lease in order to stay in where I'm staying. My choices, though, were if I were to leave, I was going to be paying 30% more to get 30 to 35% more to get the same thing. So I felt it was very, very safe, safe bet just to do what I did. But thank God I'm blessed that, I can afford it and it isn't that much of a burden. And to me, the cost benefit was worth it. But just be careful out there. And I hope they are flattening out somewhat. And we'll see over time how this works out. But that gets us into the economy, which is the jobs report, because about affordability, like, can you afford where you're living? Payrolls increased. Payrolls increased by 315,000 people were hired in August. Okay, it's almost exactly what the economists thought was going to happen. They thought 318, it ended up being 315. Some of the things that I thought I liked about this jobs report was the type of jobs that were coming in. I don't know if you remember, but after COVID, when we started getting all the jobs back, most of it was the lower paying jobs, like restaurant service industry kind of jobs. Almost a third of the 300,000 jobs this time, actually a little more than a third, were professional and healthcare related. So I know that that's a little bit more money, which means higher payroll. So that's good. They also said that the unemployment increased just a tiny, tiny bit to 3.7%. Now, the reason why that increased wasn't because of more hiring, but that more people are coming back into the employment market. So the ones that have been sitting on the sideline, we've seen a little nudge of some of them saying, maybe it's time for me to go get a job now. And that's happening. The economists overall are really, really happy with this job report, and they're talking about the soft landing again. Do you remember when we talked about a few months ago that Jerome Powell wanted to do a soft landing? And Johnny, you and I didn't think that that was really going to happen, right?
Still don't.
I'm not sure either. I agree. I'm still not bought into it, but the national economists are now saying the reason why they like this job report, it's still very strong, but not nearly as strong as like June. They were at July, there were 500,000 people hired, versus 300,000. So even though that we're seeing net increases, they're slowing down compared to months before. We're also seeing unemployment increase. That's actually a good thing for inflation. We're talking about trying to fight inflation right now. I'm sorry, I'm not setting the foundation. So all those things are reasons to think that this is going to offset inflation. So they're hoping that we can have what's called the soft landing. What's a soft landing? That we don't go into some kind of severe recession because of the higher interest rates the Fed is doing in order to slow down the overheated economy. So that's what they're trying to do, is a soft landing where we don't lose too many jobs, we don't have massive layoffs and things like that. So that's what's happening with the jobs report. Now, mortgage rates, not as good. Okay, so in the last 2 weeks, we've seen a 0.5% increase. Remember I said we've been going up a quarter, down a quarter, up a quarter, down a quarter. Well, in the last 2 weeks, we went up a quarter and a quarter, basically. Yeah. 2 weeks ago, we were at 5.13. We're now at 5.66. To me, that's 5.3 in 2 weeks. So that averages out to a quarter every week. What does 0.5% increase in interest rates cost buyers, Johnny?
So that would be 5% of their purchasing power.
5% of their purchasing power. So if you could afford a house at 5% and you could afford a mortgage payment for a $500,000 house at a 5.5%, all things being equal, you can only afford a $450,000 house to have the same mortgage payment. Okay, big deal. That's a big deal, right? $50,000 drop. If you're a $300,000 buyer, 5% is $15,000. So now you're only good for $285,000. Okay. Reason why I'm bringing this up, sellers, you got to keep an eye on the interest rates because this will affect the buying power of the people that you're trying to get to buy your house. So you really got to keep an eye on this to make sure that you're staying competitive with your other competition that's in the neighborhood. And the other thing is, buyers, you got to be talking to your real estate agent and your mortgage company constantly to make sure that the offer you're making is still going to be financially viable for you if you're at the upper limits of what you can afford. Okay, which a lot of people in the 400,000 and under price are at the upper limits of what they can afford usually. So be very careful of that. And if you don't have realtors or mortgage brokers that are talking constantly with each other and talking to you about this, you got the wrong team. I'm just telling you right now. Okay. So that's what's going on with interest rates. And then finally, housing prices in general. Okay. So at the beginning of the year, when interest rates were 3.11, this is what the national economists were telling us. Yeah, the Fed's going to raise the rates, but don't worry. We're going to be at low fives by the end of the year. That's where we're going to be at December 2022. Prices are going to continue to increase, but they're only going to increase at, instead of 15% a year, we're going to have nominal increases of about 5%, 6% a year, which, by the way, would be a phenomenal year in any other year than the last couple of years we've been in, right? That would be almost double normal appreciation, 5 to 6%. And that's what they were predicting. And month after month, I've been saying, I don't see how that's going to happen. I don't see that playing out. As the interest rates go high, I'm watching the buyers really changing their attitude, and they're not acting crazy like we talked about in the first segment of the show, where people had buyer's remorse because they did whatever the sellers wanted them to do. Buyers aren't acting like that anymore. If they feel the deal's good and it's priced right, they're going to offer you a good, fair price offer on your house. But if you're expecting them to pay above appraised value and telling you that they're going to do that beforehand and that they're going to waive inspection, right? And everything in the seller's favor, if your house isn't a perfect house priced right, you're not going to get that. You're just not. Okay? Because that's not a normal market, and we're getting back to normal market. So housing prices. First, we've been seeing month after month after month for 6 months now that the amount of sales have been going down, not prices, but the amount of sales has been going down. How much? We've lost about 25% to 30% of the actual houses that are selling. And when I say houses, I mean condos and townhomes also. So we're seeing that. But now for the first time, we're seeing the national economists going, maybe we're not going to have 5% appreciation this year. So headline in, let me see, headline in Fortune magazine. Housing prices could fall, it says could, by 20% in 183 cities, according to new data, right? Do you think Florida is part of those 183 cities?
Yeah.
Not only is it part of it, but I bet you, I don't have the full list of 187 cities, but looking at the map, we're probably 20% of those 180 cities looking at this map. Okay. So they're thinking that we're going to see prices. And Zandy, the economist, Mark Zandy's economist for Moody's, they told Fortune magazine that they think that prices will remain the same or fall as much as 5% this year. Okay. Zillow came out when they came out this year at the beginning of the year. Zillow said at December, January, they said that they believe that we were going to see 17% appreciation this year. Now they're thinking, we might lose 2.4%. We went from 17% appreciation to 2.4% depreciation.
That's a big swing.
Yeah, that's a Zillow swing. Talk about Zestimates. Thank you, Mr. Zestimate. You did a great job there. That's why you went broke trying to buy and sell houses. Good job. Okay, then we've had several other economists, Fannie Mae, Freddie Mac, CoreLogic, right? They're all predicting barely a single-digit rise in home prices. I think if the prices continue to increase as far as interest rates, we're not going to have full price appreciation. But I think at the end of the year that there's going to be a bunch of people that had that kind of 3 to 5% price appreciation still. And we're going to have other people that have actually lost maybe 5 to 10% of their value. Maybe not 10% because we're already in September. But I think by the end of the year, it wouldn't be unusual to see some neighborhoods and some houses actually lose value with some gain. And then what I expect to happen is that next year is where we're going to see the first quarter, maybe even the second quarter too, we'll start seeing price drops for real. How much? I don't think it's going to be a crash, but I think we're going through a correction. I've never been through a normal correction. I've only been through the dramatic crashes and the dramatic increases. So I don't know what a normal correction would be, but I would assume that 5 to 10% is of price depreciation by next June would not be totally out of control. If things don't go really well, maybe even 15%. So I'm thinking 5 to 10 with 15% decrease as an outlier. The other outlier on the positive side is maybe we would see 3 to 5% appreciation next year overall. So that would be the swing. But I think in the bell curve, the meaty part is going to be a 5 to 10% depreciation through next June. That's what I'm expecting to see.
If that happens, it's going to be really particularly bad luck and circumstances for people that closed on a new home like within the last 18 months or so.
I don't think so. And this is why, Johnny, is because unless they're selling the house, who cares? Who cares?
Oh, I'm with you. I'm a firm believer that the equity with the value of your home only matters when you're trying to either refi or sell it. I'm a firm believer in that. But as far as news wise, if you bought, you may, your equity gets sapped away. It only matters when you're trying to sell. But for, future sellers, yeah, you're not getting as much, but you're still going to have equity that you're selling, at least hopefully. And for buyers, it's great news. So it's really just kind of the worst case scenario for people that closed in the last 18 months, but it's really not that bad unless you're trying to sell it. And you aren't going to be able to recoup what you bought it for.
So psychologically, you don't want to worry about what the value of your house is unless you have to worry about what that value of the house is. Like
if you're not selling it, you're not trying to pull equity out of it. What it's worth kind of doesn't matter.
And especially if it's your house, especially that. Okay, so what does that mean? That means that you got to live somewhere. So there's a real. I didn't even notice this. I'm so sorry. Apparently, there's a caller that's been on hold for like 4 minutes.
Finish your thought. Go ahead.
Yeah. So the thing is that for a lot of people, you need a place to live, and there's value in that too, right? That you have your own house and it's yours, and you own it, and you can control it, and you enjoy living there. There's value in that. So it isn't like stock where you're worried about is it up and down at this exact moment.
Even stock, you shouldn't worry about it because unless you're going to cash that stock out, why are you paying attention? It doesn't matter until you're ready to cash it out. Mm-hmm. Mentality really matters for sure. We do have Bob on hold who's got interest rates and commercial property questions at 877-927-6969. Let's go ahead and say hi. Good morning, Bob. You're on Florida Talk Real Estate. How are you?
Hey, good. Good morning, gentlemen. Hey, listen, I've got a rental and I'd like to buy another one. So I keep hearing these commercials. Well, take the cash out of your house to, do whatever before the interest rates go up. So my question is it worthwhile waiting for the prices to go down of real estate? But then I'm worried about the cost of the money I'm going to have to borrow. So what would you guys suggest I do? Wait another year to see how things play out, or try to jump in now?
My advice, it is a very topsy-turvy market, so it's very hard to predict what's going to happen in the future. What I would do if I were you, Bob, is the same thing I tell everybody else. I'm kind of a broker record. The first step is just assume that as if you were going to do something right now for sure, know your numbers. So actually get real facts. So we would get you over to Mike Raff from the mortgage firm, for example, if you work with us. And Mike would crunch all the numbers of how to get the money that you need to buy the second unit and what you could afford. Okay, that's the first thing. Know your numbers. If I were going to buy something today, this is how much money I got, and this is my budget, and I know I can do it. Then once you have that number, you got to sit down with a good agent like me, right, and our team, and we sit down and we go over your business plan. Are you looking for Airbnb? Are you looking for a long-term annual lease rental? Are you going to keep the thing for more than 3 to 5 years? We start asking you all those questions. Then based on that, what you might want to do is start looking now, and this is only if after we do all this consultation, but for a lot of people, what I would recommend in this market, start looking now because you don't know what the future holds. And if you find a deal that hits all your numbers exactly correct or better than what you were hoping for, then maybe you go ahead and pull the trigger because you know you got a good deal that numbers work for you right now. But if you don't find that, wait and say, this one almost meets my need, but I'm not ready to pull the trigger yet. Let's see if I can get something better and keep an eye on the market. So it isn't a black and white answer for you. Unfortunately, it's a little gray. Every case is like a snowflake, so we would have to go over yours, but I'd also kind of keep my options open. So I'd have my gunpowder dry and ready to be used. I'd have, dry and ready to be used, my gunpowder, right? And then if you find something, pull the trigger. And if you don't find something, pass until you find the one you like. That's what I would do in this market.
Thank you very much, gentlemen. Makes a lot of sense. All right.
Okay.
Excellent.
Well, thank you, Bob.
Yeah, Bob, when you're ready and you're looking for a team, remember FloridaTalkRealEstate.com, your one-stop real estate shop. Have a great weekend, my friend. Thanks for being with us. Very limited time, but if you want to squeeze in a phone call, 877-927-696, and we might be able to do that. I just feel like we might be hustling you along a little bit.
I feel like, those same questions, like, no knock on Bob or anything, but the same question would be like if you called Jim Cramer and said, hey, I want to buy McDonald's stock today, but I think it might come down tomorrow, 6 months from now. It's like you're still just trying to time the market. Does it make sense to you at this point? Can you make money today?
And think about this. Let's say, Ross, you find a really good money-making property today, right? And the other option is if you didn't buy this property, you wait a year, right? Well, now you're making money the whole year, as opposed to waiting to see what's going to happen in the market later. You're making money now, right? Which is what you want to do, is make money, right? If you're an investor. So you really have to look at everything. But if you have an agent that's telling you all the time, oh, you got to buy now. Agents are trained, like good agents are trained. No matter what the market is, it's always a good time to buy. It's always a good time to sell. And that's what they're going to hold to if they're just salespeople. If they're people that actually care about your future and trying to do the right thing for you and help you get the right advice for you, then you want to talk to people like us that are going to sit down and figure out what's the best plan for you. And you might not even agree with our plan. You might say, well, I want to do it this way. Well, that's the right plan then. But at least you're educated and you know all your options. And I guarantee when you sit down with us, we tell you about stuff that you never even thought about. You go, oh, I never thought about that way or this way. And sometimes the answer is don't buy. I just told a couple this week they're going to sell their house and buy a new house cash. They love the house they're living in. They're like, do you think I should sell and buy now? And I go, you're buying cash? And they said, yeah. I go, do you like the house you're living in? Yeah. I go, I wouldn't necessarily do it right now because it's going to be their personal residence. I might wait for the market to soften up a little bit for that cash buy, Yeah. So for them, I think it's better.
Yeah. But in like Bob's case, it's like, okay, you're trying to time the market at time, not only the prices, but also the interest rates. And, at the end of the day, there's a 50% chance that you're right, and there's a 50% chance that you're wrong. So you wait a year and then you're like, oh man, I should have done that last year. Just think if it makes sense for somebody today, then it just makes sense.
You nailed it. When it comes to
timing, way to find that out is to talk to you guys.
Yeah, when it comes to timing, when it's right for you, that's the best time. When it's right for you and your family and your circumstances, like Jim said, get with the pros, get all the things that even you're not thinking about on the table, talk about the plan, the future, and have a roadmap for how you can get there. There's several paths that you can travel, and the details, all that is involved, it is so very important in your decision making. But you got to go to people that are really good at what they do. How about great at what they do? If I send you to FloridaTalkRealEstate.com, your one-stop real estate shop, that's what you're getting. A team of pros. They are great at what they do. They work together well. This is the reason that I'm here every Saturday morning hosting this 2-hour infotainment section for you, because I feel so strongly about this team. They've helped me and my family time and time again, and will here in the very near future as we're looking to be a little upsizing before we know it. And it's about timing it. It's about making sure I know my numbers and my positioning. Thanks to Florida Talk Real Estate, I get all that and so much more. You can too. FloridaTalkRealEstate.com. Know it, use it, love it, and share it. You can change people's lives by sharing FloridaTalkRealEstate.com. Remember, we're on Facebook and YouTube. Lots of informational videos on Florida Talk Real Estate's Facebook page and YouTube page. Really chunk videos galore. That's Florida Talk Real Estate LLC. Ross Komarinetz, enjoy your Labor Day weekend, my friend.
Thank you. I'll do my best. I hope you do too.
Jimmy D, Jim DePola, I hope you do as well.
Thank you, Johnny. I hope everybody has a great Labor Day weekend.
Yes, if you have the time off, be safe, have some fun. If you don't, I'll be thinking about you getting some time off to enjoy. And please be planning on sticking around the locker room. He's got Greek and Joe joining Jimothy for the next 4 hours. I'll be listening. You should too. And we'll be back next Saturday, Florida Talk Real Estate. It's every Saturday, 9 to 11, right here on Real Radio.